Hello everyone and welcome to XM Live here in the beginner's room. And this is a very special session because of two things. The first session, it's my weekly session where I do live trading, market overview, and you will tell me what I have to trade. And we are trading here very transparently. I'm showing you every profit and all the losses. And the second reason why this is a special session, because this session is also on YouTube. So I welcome you who are watching from YouTube. XM Live is an incredible project that we started a few years back, where you have on 3 different channels. You have XM Live, you have XM Live for beginners, and you have XM Live Advanced Room for 3 channels, 8 hours every day, where we are streaming 15 experts. I think we are streaming 8 hours per day. It's unbelievable. Everything for free. So if you're at YouTube and you see what we are doing here and you like what we are doing, you can after that click on the link and you can move also to our rooms again, totally for free. So again, I come back. For those who don't know me, I'm a full-time trader since 2012. I trade my own capital and I trade also for institutionals. I do this since 2012. Of course, I do this much longer, but in 2012, I became full-time. And I'm sharing here my thoughts with you. And I'm trading live. I show you exactly what I'm doing, how I manage the risks. I can tell you my rules that I'm having. In general, I will tell you I have a process-driven trading strategy. What does it mean? It means that it's like a little bit a checklist from a pilot. You know, I check if all the conditions are right, if everything is working right, and if yes, then I have a plan what to trade. So and my approach is based on 3 levels. First is the fundamental level, and by the way, I'm trading mostly forex, indices, and commodities. This is my main focus. I'm trading less stocks, but I look on the first level, on the fundamental level, monetary policy, fiscal policies of different countries. That gives me the big picture, not per se the trading approach, because sometimes, you know, the big picture is I give you an example. I think the euro is totally undervalued against the dollar, or the British pound is undervalued against the dollar in the long term, but that doesn't mean that in the short term, euro and pound can still fall against the US dollar. But it gives me a broad overview, the fundamental level. Then I have the sentimental level. On the sentimental level, I look mostly on the COT report. I look at the COT report and I look, what do institutionals, what do hedge funds do? And the COT report is a report that is published by the US government. Everybody can download the data for free. I download the data. I can show it here. Let's see. Oops, why is it not showing really? Let's go to another one. Oh, here we are having it. So you see, this is the data I download from the website of the COT report, but I make myself a dashboard, and then I can see the different groups, how they position themselves, how extreme are those positions, and I can see also the volume and the change week over week. And this information gives me the sentimental level of what's happening in a currency pair. And then finally, after I have my fundamental level and my sentimental level, I get a bias. For example, I have a bias of being long in Swiss franc. So, and by the way, I do these analysis on Sundays. So I know for the whole week, I am probably looking for long entries in the Swiss franc. And now it's about technical. So that's the third level. I look for a good risk-reward ratio, and this is when I enter, and I risk between 0.5 and 2%. So that's the framework of my trading system. And again, I do this for more than a decade. I do quite well with it. Some years I have a couple of 100% performance. In my worst year, I had a loss of 9%, but that's life, you know, not everything works all the time. But in general, I'm doing quite fine with it. Now, if you have any questions, please ask. Now I will tell you what I'm doing here. So another thing on my trading strategy is that I do pyramiding, and pyramiding is what is called also anti-martingale. Martingale, many beginner traders try to do. This is adding positions when you are in a loss. This never works. Martingale does not work in financial markets, and the reason is because financial markets work in trend, and if you get into the wrong market and the trend goes against you, martingale will kill you. But on the other hand, anti-martingale works. And so an anti-martingale system is working as well. By the difference between martingale, you're adding to your losing positions, and in anti-martingale, you're adding to your winning positions. So that's the difference. And again, this is my long-term trading approach, and I do this on my live account, and you can watch it here at XM Live. I show everything transparently. Now, the Thursday session is special because here I'm trading a special account. I'm trading a demo account, but the idea here is that you decide what I have to trade. So I'm asking you in the chat that you are telling me what you want me that I'm trading. Okay? So if you tell me I want you to trade gold, I will trade gold. I will decide the decision, the direction. I will decide the risk. Again, I will risk between 0.5 and 2%. And I will do everything else, but I show you how I'm doing it. And so this is a practical implementation of theories that we learn through the week, and of everything when I teach about the COT report. And so you see the practical implication, how I translate the COT report ideas into my trades. Okay, that's it. I think so. We still have 2 positions open from the previous week. You see there is a long trade in British pound US dollar, and there is a long trade in euro US dollar. The euro US dollar trade is a little bit in minus, and you can see what I did here. This trade, you can see this is the daily chart. Let me bring in a pen tool so I can start to draw. We had here, we can show it here. We had an uptrend since September. We are going upwards. The trend got a little bit weaker here. We made a new high. We bounced back. I'm speculating that we are coming back a little bit more. So I was waiting. I think somebody asked me to trade this when we were here somewhere. And I said at this level, I really don't know what to do, because on the COT report, I still get long signals. So I can't go really short, but I won't go long at this point. So I put in a buy limit. And I think the buy limit was just on a Fibonacci level. So if you go probably 61.8, yes, it is 61.8. You can see this is the Fibonacci level, because at this level, I get a good risk-reward ratio. If this is eventually going up again, you see this is 61.8, and this is 38.2, the risk. So roughly, I risk 1/3 in order to get 2/3. Okay, that's the idea. At the moment, it goes against me. That's life, you know. But if it goes like all the way against me, I will risk, I think, not more than 1%. So let's see here how much I'm gonna risk. Sometimes it's working, sometimes not. Yeah, 1%. That's what I'm risking here. And Fenio is asking, can you look at US dollar, Swiss franc, and New Zealand dollar, Canadian dollar? So 2 interesting currencies. And US dollar, Swiss franc, this is a trade in my live account. I already opened a trade there. And definitely we can open also here a trade. So we got already 2 trading ideas, and I will take them. So also, if you're on YouTube, if you want me to take a trade, let me know. The The questions will be forwarded to me and I will answer it to you. So, okay, let's open a US dollar Swiss franc trade. Now let's first look at the COT report. And actually the Swiss franc gives one of the strongest signals within the currency pairs. So what we are having here is for the last couple of weeks, you can see open interest is growing. You see, there is for 4 weeks, open interest is growing. I don't know if you see this very well on your screen, but there is a gray bar chart and the bar chart is growing. So that means new market participants are entering for the last 4 weeks. There is some interest in this currency pair. The question is in which direction? And here, when you see these purple lines, those are the dealers. If the dealers are selling Swiss franc, what does it mean? It means that mostly the institutionals, they are buying. And you can see this here. This is the blue line is asset managers. They were a little bit bearish, but they started to turn bullish in recent weeks. The same is true for hedge funds, which is this brown line. So hedge funds and asset managers starting to buy Swiss franc. Now, what does it mean? It means for me that when I go here in US dollar, Swiss franc, and let's move in there, I look for a short opportunity because I want to go long Swiss franc. What we are trading here, this is, let me just move this. What we are trading here is US dollar, Swiss franc. So if I go short, the Swiss franc is the strong currency. So I look for short positions. Now, what I'm seeing here is the weekly chart, and we see the last 4 weeks, this went up, but I'm looking for short entries. So I think we are getting, first and foremost, often you can see, and let's move now into the daily chart because that's quite interesting. In daily charts, what you can see often is that a trend in a currency pair is often 1 month. Okay, so you can see here during May, US dollar Swiss franc went up. So the Swiss franc was weaker. But in the months before, US Swiss franc went down for the whole month. And before it went also down the whole month. And then it went up. But you see, mostly we are in a downtrend. And only just because of May that it went up, it doesn't mean that we have a trend reversal. Actually, we still have a downtrend here. You can see this clearly in the daily chart. And we corrected. And yesterday, a little bit a thing happened. So when I go here now into the hourly chart, you can start to see that there is a possibility that we make exactly now the trend reversal. This could be a shoulder head shoulder formation. And I would say it makes most sense to trade this short if we break here below. So if we break here, now again, why do I want to go short? Because in the COT report, I see institutional, they like the Swiss franc. The Swiss franc looks good. Now, during the whole month, the Swiss franc went up. Now we can turn around because it's also the beginning of a new month, and that's what I want to trade. So my trade will be, and now we will open the trade. I will trade here if we break below this level. So I will take here, this is my entry level. And my stop loss will be around here. I want to put the stop loss, I give it some distance. Let's see how many pips this is. Wow, only 25, 27 pips. So I can open quite a big position here. This is nice. So what do I do? Let's start with the calculation. I want to risk $100. I have to translate this $100. My account is in US dollar. I have to translate my $100 into Swiss franc. Why? Because when I trade US dollar Swiss franc, US dollar Swiss franc, the profit and loss is always in the counter currency. So the counter currency, it means that I have to multiply this with the price where we will be, which will be 0.9091, let's say. And then I have to divide this by the ticks that is from my entry to my stop loss, which is 270. So divide this by 270. This gives me the position size. Okay, that's the calculation.